In this session, I'll be um, walking through how I vet the VPOC Shift Continuation setup. It's quite a basic setup. A lot of people in the community talk about it and ask about it, so I figured I'd share how I personally vet this setup. I'd love to hear how others do it as well. We can use this as sort of like a knowledge sharing within the community to see how things are done. And just to recap, or describe what the VPOC shift continuation setup is. It's basically when the developing VPOC shifts lower. If it shifts lower, then we enter into a short position, or if it shifts higher, like this one by here, we enter into a long position. Specifically, this setup is with a 3-point scale. And what that means is we take the first or get risk neutral. So this is based on a two-lock configuration. And then we take the first off at 3 points with the stop loss of 3 points as well. Um, and then you can have a runner on, and then I don't track the runner here, but I track MFE, so we'll go into that a bit. So specifically in the setup, we take a trade in the same direction as when the developing VPOC shifts. The shift must be more than 1.5 points, um, and the shift happens 30 minutes after the open and 30 minutes before the close. So I personally don't really trade into the close, which is why I track it this way. Um, the other criteria is such that there's a 3-point scale, and so the stop loss is also 3 points. And then other attributes that we track when we vet this setup is the time and date that this happened, the direction of the shift size, the context at the time. Is it trending? Is it mean reversion? Is the shift the same direction as the last shift? So sometimes in trending days, you'll see that the VPOC shifts up multiple times. So we track, I'm just curious, so I track whether or not the shift is the same as the last shift, which could signify maybe a reversal is happening or not. Um, is the shift happening outside of the previous day range, the MFE, the MAE, and the day type as well? So did it open high out of range, high in range, low in range, or low out of range? Okay. Another note about the setup is this vetting setup is I track it in Notion. So basically, I set up a database in Notion, and then each entry is each time VPOC shifts happens, and then I track all these attributes along with screenshots, and then I use Sierra Charts as my charting platform in addition to Bookmap. But in this, whenever I vet, I use Sierra Charts. Let's go through an example here, maybe one of each different type. So in here, let's do maybe this one, July 1st at 9 a.m. This is Pacific time, so it's about an hour and a half into the trading, or 2.5 hours into the trading day. So in this case, we VPOC shifted up, and then yeah, the market took off. So how do I track this specifically? So it happened on July 25th at 9 a.m. The day type was high in range, so the market opened within the previous day range, but above the close. The direction of the shift is up. I have an ID in here, just sort of like a unique identifier. So usually within the database, that's how it works. MFE, so from the point of entry to the highest point, that's 17.75 points. MAE, so the trade moved, the market moved against the trade about 1 point. This happened within the previous day range, so I tracked that as well. So it's not outside the previous day range. It was in the same direction as the last shift, which I think happened somewhere here. Did we get scale? Do we have to scale at or below the lower day or high day? I track that as well. We don't in this case. Oh, actually we do, because at this time the high is right here, which is more than 3 points from the entry, and the entry being the VPOC itself. And then do we get scale? So 3 points. Yes, we do in this case. Is it a scratch? No, in this case. A scratch would be that it had moved up, maybe not get to 10 points. You could define sort of like a minimum MFE as well. In this case, I don't. I just eyeball it. So in this case, if it's less than 10 points, then it comes back and takes out the stop at 3 points. Then it's considered a scratch. But in this case, it is scaled. It's not scratched. And then you can see that the MFE here is 17.75 points. Let's do another example. Maybe this one right here. Let's see, July 30th at 9:20 a.m. In this case, VPOC shifted up. So the direction of the shift is up. The market opened high in range in yesterday's range. FFE is only 1.75 points in this case. So from here to this top point right here, in this case, it's 1.75 points. And then it went down to here, which is around 4.75 points. So it did not happen outside of the previous day range. Was it in the same direction as last shift? No, in this case, because the last shift was this downshift right here. And then do you have to scale more than 3 points above the higher day? No, because I think the higher day at the time was here, but it's quite close, but it's more than 3 points. Was it a scale? No, because it only went up 1.75 points and we set our scale to 3 points. Was it a scratch? No, because we didn't even get scale. So this is considered a full stop. Okay. I guess you could also track whether or not it's a full stop or whether or not it's a winner. So you could set criteria for vetting around how many points does it need for you to consider a winner or for a scratch. But in this case, I figured if you just track the MFE and MAE, you could be a bit more flexible in terms of whether or not this is a scratch. Meaning you could say, if I want to scale at 2 points instead, or scale at 1 point. In this case, this occurrence of the VPOC shift would be classified as getting scaled if your scale is 1 point, for example. Okay. Okay, so I've done a bunch of this. I'll share this as well. But let's just do like a live one here. So let's see. So I stopped at July 30th. Let's go to July 31st. So on July 31st, what happened here? July 31st. Okay, yeah, we opened like gapped up on this day. Yeah, because P high. Okay, right here. Yeah, we gapped up. So let's see. I'm gonna start from here. So going back to this, so let's find the first occurrence of when VPOC shifts after the first 30 minutes. So the market opens at 6:30 on my time. So here is the first shift. Okay, here we go. July 31st. Haven't done that yet, right? July 31st. Nope. Okay. Yeah. Just double checking. July 31st. Okay, not yet. Okay, cool. So the first occurrence on July 31st is at 7. That fit the criteria here is 7:13, which is right here. So I have this up. Yeah. So it shifted up. So let's do this. July 30th. So this is a created time, so you can ignore that. So July 31st. Include time, it was at, was it 7:13? Okay, and then the day is high out of range, and the context is what? It was sloshing through this, so I would consider this a mean reversion. The shift size is 8.25 points, so 8.25 points. Was it in the same direction as the last shift? So let's see. So we are here, and then the last shift was here. The last shift was here down, so it wasn't in the same direction as the last shift. Are we outside of the previous day range when this shift happened? So I think yes, because P high, previous day high is right here. So I'll say outside of previous day range, yes. And then do you have to scale at or below low day, high day? So let's see. So the current high day is right here. So the distance from here, where VPOC shift happened, to high day is 5.25. So the scale location is, you don't have to scale, the scale location is not above the current high day. It's basically what this is asking. So it is not. So you don't need to take that. And then, so shift this up. So do we get scale? In this case, with 3-point scale, so no, we don't get scale. Is it a scratch? Nope. So here, 1 point, MFE for this trade is 1.75. And then I guess in this case, you could track, I track it all the way down here just to see, you can maybe track it MAE to here, but I'll just track it here just to kind of see like the biggest, the obvious swing low. So 43. So, I mean, this is data. I actually know, I figured, yeah, you can maybe track it as sort of like, oh, can use it as a reversal maybe. Okay, but I won't go into that. So that is the first shift on the 31st. It's the first one actually. Okay, so I type it here. So if there are multiple, I would use it as sort of, I've used like the name of this. So this is a page on Notion, the name of the page, which is required to be the time, like the is it the first one, the second one, or the third one for that day? Okay. I also take a screenshot, so when I come back to it, I can review it. So I do this. I'm gonna draw it on here. It happened here and right here. Okay. Yeah. So that's the first one, and then let's do the second one. So this is, you see that this is quite repetitive. So you just keep doing this until, I think it's quite good because you get to see the occurrence, what it looked like as well. Because the more you see it, I guess the more familiar you can have it and the more recognition. And it also, I guess, gives you confidence to kind of understand what happens within the context of when this setup occurs. Okay. It's tedious. It can be somewhat boring, but I think, you know, it's great practice to do. I mean, I feel like you have to do this. Okay, so the second time this happened, you see here. So the second time the shift happened, so this first time's here, so this is the second time right here. Okay, here, so it shifted lower. You see that there's a shift that happened here as well, but we're not going to do this because it's less than 1.5 points, 1.75 points, 5 points. So here the shift. Okay, so the second time, what time did this happen? It happened at, sorry, missed it. Okay, 10:03. 10:03. So 31st, the time, 10:03 a.m. Again, same day, so I had a range. What's the context now? Slashing through this. It didn't get back to here, so I would say trending. Okay, the shift. And what you could also do here is, I want to go back, is trending which direction? Is it trending short or is it trending long? Or maybe you could mark this trade whether or not it's a counter trend trade as well. Like tracking all these attributes, I don't think the more data points you track, I think it's just, I like data, so I like to track all this stuff, but just to keep it simple, I start here, but you can always expand on it. Okay, so where was I? Okay, so the shift size, oops, shift size from here to here is what? 22.5 points. So 22.5 points. Okay. Now, was it in the same direction as the last shift? No, because the last shift was up. This time it's shifting down. Is it outside of the previous day range? No, we actually fell into the previous day high, then actually previous day value area high as well. Scale at, or do you need to scale below the current day low or above the current day high? So no in this case, because the current day low is here, and then the direction is down. And then did we get scale? So I guess not, because here it moved all the way up here. First move is 5. So MAE for this is 5. So you would not have gotten a scale, you would have gotten stopped out in here with the 3-point scale. Okay, if you change the criteria to like 10 points, and this would not have been a full stop. So here, with trades like this, I'm going to track the MAE as something like down here. So from here to actually, it went quite far. So maybe I'll do something like this, like from here to here is around 50 points, 56.25 points. So what this tells me is that maybe if with a wider stop, I would have been able to caught this, but that's neither here nor there. It's just a data point, right? Of the behavior at which that happened when this VPOC shift occurred. Okay, it's one of many occurrences. So tracking many occurrences of this will give you some sort of, you'll be able to see some sort of pattern and maybe come up with a plan that you could take advantage of this behavior when it happens. Okay, a shift happened here as well, but we're not going to track it because it's like towards the end of the day, and that's outside of our vetting criteria. And then also this one we don't track because it is less than 1.5 points. Okay. Oh, let's take a screenshot of it as well. So here. Okay, taking a screenshot of it. One interesting thing to note about this is that, so I track microcomposite HVN, or in this case, I call it VHVN, which is, it was a previous microcomposite VPOC, right? So look how interesting it is. So the market came here, reacted, broke, tested it from below, and it just so happened that like when this VPOC shifted, the market came up and tested here. So one thing you could consider is, do you place a fixed stop at 3 points, or do you consider the market structure, right? Denise said VWAP is also right here. So where do you place your stop in a case like this, right? So which is where the vetting behavior occurs. Like a criteria could be, oh, do I place my stop every time when a VPOC shift happens? Do I place my stop behind like a higher time frame location, or some auction, some position that's relevant to the auction behavior? So in this case, it could be here, right? That's something that you could track. So here, it happened here and here. Okay. Yeah. So that's sort of how I do it. I do it. So I've done how many occurrences of this already? 84. And so with this data, let me go into it a bit, how you can kind of use this, or how I use it. So let's see. All right, out of all these occurrences, scale. How many scale? So 46. So 46 out of 80. So that's just a little over 50%. Okay. How many of those are scratches, right? The average MFE around 10. The averages in this case is kind of, I wouldn't really use it. But what you can kind of see is that, say I filter for all trades where it's scaled, not scratch, right? Meaning it went to whatever target. I'm curious to see what the MFE is in this case. I would think that it's quite big, meaning you could kind of use it to give you an idea that whenever this happens and it doesn't come back for a scratch, that the trade runs. So what you could do is maybe you could set your target further out, or it gives you confidence to set your target further out, or maybe even have your scale further out, right? And then let's see. So here, scaled, not scratch. So check scaled and not scratch, right? So these are all the winners. 22. See, average MFE2 here jumps to 22. So these are all winners, meaning like you got scale and then it never came back to take you out if you don't move your stop loss. Okay, let's do, so how many winners as well? Let's see, 32, right? So 32 out of 80 were winners. Okay, 32 divided by 40%, quite high actually, but okay. Um, and what else? Okay, maybe you want to see some trend around, oh, does it happen more within a particular context or within a particular day type, so opening type. You could do so, like say I want to group them by opening type. So right here, you can group by day type. So you hear that high in range, 33 occurrences with 20 scale, right? Same thing, 18 out of 29 for high outer range, for low outer range 6 out of 14. We don't have a lot of low outer range days because the last the market's been on an uptrend. So I'm gonna keep betting more of this, but um like there is something here where you could take advantage of and maybe build a profitable career out of, right? So now you've vetted it, for instance, now it's execution. So you got to work on the execution. Do you have the mindset to be able to execute this every time? Do you always execute with the in the right context and things like that? Right. So this is where forward testing and trading on sim and whatnot comes into play. But at least this is the beginning step, in my opinion, of understanding what a setup is, coming with a plan, developing a better understanding, layering your understanding of a particular setup. And the more you do this, the more comfortable you'll feel, the more confident you'll feel, you'll see it. And when it actually becomes like, of course, trading live is very different, but when you get to seeing it live, doing this sort of practice day in, day out, you develop the confidence and the understanding of the setup. Okay. I'm going to post this and share this. I'd love for your feedback. Yeah, let me know how you do it or any thoughts on how this is done. Thanks for listening.